Hello, everybody. Welcome to a new case study review. I'm sorry if I sound a bit sick. I am a little sick, bit of a sore throat, but pretty much want to cover my drill from yesterday during right after the new day open, which was right after the new day open, and then this morning, February 20th. I have the markups for this whole scenario and how I excuse me, how I tracked my invalidation throughout pretty much the whole step of the way. Um, but first, I will cover this, and then I'll come to this. If you want the markups for the trade that I took this morning, just go to this date, February 20th, 2024, and I'm probably going to post them right after I finish this video. So let's go ahead and get started. So, excuse me. So obviously, if we're looking left, right, you could say that we are, from a swing standpoint, bearish. From a major intraday, we are technically bullish. But I don't really care too much about the bearish. I more so focus on my major, my minor, my scalp, very rarely my micro. But for the most part, I do like to stick to, anything below major intraday. So when it comes to how I found my bias, right, one is right an unsubstantial new break. So this is not a sweep model, but this is an unsubstantial new break. As I told you guys before, the definition for that, which I told you guys in a recent Zoom, it's when we have a break of structure, but we have an immediate transition after we break that excuse me, that swing point. So I would say if we are looking at a structure POV, we have a low into a high internally in order to reach that previous major intraday high. Then we have a pullback and we have a new high, and then we have a pullback and then we have a new high, right? But we are still failing to close with a substantial new high. So as soon as I see that this now gives us an internal LG, right, that now solidifies this as the external high. And this would be obviously your external low. So the internal move, it is bearish, but it is only the pullback. So I'm not really going to trade inside of this range unless I'm only aiming for immediate targets. So let's say we have a CBOS, potential POI, maybe there's a transition, then I'm only aiming for the internal move here. Right, so once I am looking, right, to find some type of position, then I note that, right, we kind of just swept, right? This I would consider a sweep model, right? One of the, or pretty much the low that took the high of daily liquidity, or of major intraday liquidity, sorry. And we had a transition afterwards. I know a couple of you guys caught this trade yesterday morning, which is a very good trade in my opinion. But this is a sweep model because we took a significant structural level and then we had a transition immediately afterwards. So that, right, if you're only looking for the scalp / minor intraday scenario, then you're looking at, right, transition, right, internal transition, external target. The internal transition leads us to the external target, right, and this kind of solidifies itself as, right, the pullback low of, right, the external high, low and the external high, sorry. But however, you guys know that I'm always interested in the internal view. So once I'm looking at the internal view, right, then excuse me, I noticed that the internal transition that led to the external liquidity point then there gave us a sweep model, a type of sweep model, because we broke the high, but immediately afterwards, internally, this has to be bullish in order to reach this liquidity point. So low into high, right, and then a low, right? We have two CBOSs, which confirms this low or solidifies this low, sorry. So we have an internal structural disruption here based on taking out two internal highs within this range, and then it fails. So we have a structural disruption, and my entire POI was based on the final push into the upside that led into breaking these internal highs, sorry. Right, so there we came down, and I'm just trying to be conservative, SL at the invalidation of the structural disruption, right? And we met we pretty much had the inverse now of an internal transition and external target, but now in the opposite direction. So even though I was fighting technically the external major intraday, there is an internal transition, and you guys know that I'm a scalp / minor intraday trader, so I'm looking at this, to continue lower. So I didn't take this right, but it was a drill, only because of when this happened, which was 4 p.m. right at the new day open. But I thought it was very interesting, a very good structural disruption, and it just goes to show that, especially with FX, you can see these moves happen like all the time, right? Like, for example, you see even right after this move is liquidity has been taken, right? We have an internal reaction based on a POI, then there is a move upward that is order flow disruption, right? And where did that bullish move start? That took out the previous high, that started here, that went up. We have the mitigation and we have the invalidation, and that's a very big move there, and that's more of a London session move. But you guys can catch these moves almost any time of the day. You just have to be patient, you have to follow the rules. But that brings us to the scenario from this morning. So the scenario from this morning, I believe it was, no, it was an M5 move. So my entire approach here was, we are within the trading session, excuse me, and I know that we are externally bullish, right? But I do know that we have potentially a transition here. Why? Because from the major intraday standpoint, or I'm sorry, the swing standpoint, you could still argue that we're bearish here, right? Like, we did take out a major intraday high, but the swing, we know that that only solidifies the swing low. So this would be a high, low, CBOS. So we have a swing high here, swing low here, and who's to say this can't continue lower? But that's more of a swing bias, and that's not really too valuable for me. It's just acknowledging that although the major intraday may be potentially bullish, the swing is potentially bearish. But realistically speaking, if you are a scalper, both of those notes of information aren't necessarily the most important things ever. So what is happening internally within the session? I know that we are technically bullish internally, correct? Right, and this would, excuse me, I would more so consider this my minor intraday range. This is technically bullish, right? But the reason for my sell scenario was that we had a bullish POI to continue higher, right? Because we obviously have CBOS, and this could continue higher. But we have the POI, we had the reaction, and that reaction, if you want to zoom in, right, we can see coming into the POI, you see there's a solidified point here, and this high created the final low that was taken, and then that, right, is completely taken out, and it gives us order flow disruption. So this is very interesting because I do not want to buy here solely because we are buying at a premium. If we're looking at the internal or the minor intraday range, which is from low to high, this is buying a premium. So I don't really want to do that. So I didn't buy after the reaction of the POI to then take it higher. I'm looking for a model. So the model in play here was order flow disruption based on the failed reaction, the failed POI, and I took my position right towards the bearish side from here. And if you're asking me why am I using this low and not this low, or I mean not this overall candle, it would give me a higher risk to reward, which at first I was aiming for, right, the swing low here. I mean the previous swing high here, right? This is the final push down before they move erupted upwards, and I still think we can come down here, but I'm more so looking to be in and out of trades by, let's say, 1-2 p.m., which is about 2 hours before the new day. So I kind of altered my TP and I made it to here, which is the internal final push downward, which took liquidity, which led into the bullish impulse upward. So if you're asking me why, right, I took the entire POI and not just looked at the M5 POI to get a higher risk to reward, is because you guys know that I'd rather, I just want to get in the trade and I want to win the trade. So the only ways that I know that I will make sure that I'm in the trade is that if I take, right, my entry based on the final push up, which took liquidity and then came down. So this entire move was used to push up price to take out a previous internal high. That then gives us order flow disruption. So I know that at the bare minimum, we will come here, right? Because I've seen very, very multiple scenarios where it will not reach the final POI, or it did not reach, or it did reach here, but sometimes I don't see that happen. And like I said, I'd rather just be safe. I'd rather just get in the trade, right, and win the trade. That's the priority, is winning the trade. And if you want to have a definition for what is a winning trade, a profitable trade. Simple way of putting it. So my internal management, right, we came into the area of interest and it even topped that M5 that we talked about. And then from there, we had a bullish LG. I mean, a bearish LG, sorry. Which a bearish LG here, we take out this high, we came and we take out this low. Then I now can move my invalidation from here I can now move my invalidation from there onto here. Why? Because if this is now a bearish LG, which is in alignment with the internal trend here, the scalp trend here. So if we have a reaction here, and this is to then break, then that is structural disruption, right? So from here, I kind of just waited. I didn't, like, for example, if I have a new low here, I'm not moving my invalidation here. I'm kind of waiting to see what happens after here. So after here, right, we substantially break, or we create a substantial new bearish trend to the downside, and we have a solidified point here, right? We had a CBOS and then a CBOS to the opposite side. We had another confirmation of a bearish LG, potentially an LGC model. So because of that, I can move my SL here. And now, mind you, we are at the reaction of this previous POI, and then that continues lower, right? And then this has a final push up before we come down, which took liquidity here and took liquidity here. So this is now a new point of reference. This new point of reference from here, I was hoping that this would kind of just continue lower from here, but it didn't. But after we created this internal LGC, then my invalidation is now here, because now I know that if this reaction is to come forth and then break, then that is now order flow disruption. Right, so we now have a high into a low, to a retracement. This retracement brings us down into the low, so I can move my invalidation here because we also have a CBOS and another LGC model, right? So I was hoping from here we would just kind of just roll over to the TP, right? And after we saw the order flow sequence from high into low, high into low, high into low, right? Here was very interesting because we were right around here, and I had sent you guys a message in the chat. Do you guys think this will be a sweep model, or do you think this will continue higher for a bullish continuation? The reason why I was asking that is because we have 1, 2, 3 relative equal highs, and then that is then swept, right? And I wanted to know if you guys thought this would create a bearish reaction and a reversal, but the only way that could be confirmed is if this low was broken, right? Because let's say we were coming up high, low, high, low, high, low, high, low, high. Then these are all just CBOSs, right? This is the last time we had a CBOS to then come into the upside to take out previous liquidity. So I want this to break if I'm going to change my bias. That's why I trail my invalidations as such. So if we come back here, then sorry about that. Then here I note, right, that there is still bearish order flow in play, and I could even note that there is another LGC, or just a regular LG here, where we take out, right, a previous wick high, and then we take out the previous structural low. So from here, I genuinely thought this was going to be it. This is going to roll over from here, but I know that if I move now my SL to where my final new invalidation is, then I know that if we break through here, then that is technically order flow disruption, right? And as you can see, we didn't reach the target, right? But we did secure some R. And this could potentially flip from here. It can obviously still continue lower, but because of the order flow disruption, who's to say this doesn't just From here, obviously the only way we could convert to a bullish sense is if this breaks, right? So who's to say that doesn't just break from here and then it starts coming back towards my entry, you know? Not to mention it's pretty late in the day. It's about 12:30, which is 3.5 hours before the new day open. So I don't want the stress. Just take me out of the trade. It's a profitable trade. It's a winnable trade, and I managed it as I could. But yeah, I will send you guys these markups after this video, and I will see you guys in the next one.